Hi, everyone. Lisa Crosta here. Today, we're joined with J. Michael Fischer Jr. to do another Crescent Connections. Lisa Crosta, Director of Financial Planning at Crescent Harbor Private Wealth. I'm going to take a minute to introduce Michael, and then I'll let him tell a little bit about himself before we jump into some questions. Michael is the Managing Director at DBD Investment Bank. He's got deep experience in the areas of investment banking, commercial banking. He has been involved in structuring billions of dollars worth of loans, deposits, and complex financial instruments. He's also, prior to being at his current position, he held positions at First Bank and Columbia Bank. He's just has a ton of experience with complex relationships and client relationships. So let him tell you a little bit about himself, because he does have a little bit more than just a banking background.
Thank you so much, Lisa. I'm really appreciative to you guys for having me on the show today. But yeah, my name is J. Michael Fischer Jr. I'm a managing director at DBD Investment Bank. We only work with founder-led and family-owned businesses. That is our, if people ask us for what's our niche, that's our niche. No financially backed companies. This is just a real extension of my entire career. My entire career has been spent with working with owners and operators of operating businesses. They call them commercial and industrial businesses, C&I businesses. I started my career as a commercial credit analyst and then worked my way up to be a middle market banker here in New Jersey. And then I turned to the dark side of the force and got into the investment banking world. As a lot of my clients started to kind of get to that inflection point where it's like, okay, what do I do next? Do I want to focus on hyper growth, or thinking about transitioning to the next generation or selling the company, et cetera? But yeah, you mentioned kind of an uncommon background. I did not spend 20 years as an analyst sleeping under my desk at an investment bank and going through the process. I literally started my whole career. I was a janitor. I worked on an assembly line. I did all kinds of crazy stuff. Was a musician for a long time. Finally came back to banking, fell in, started a teller, and then worked my way up to where I am today. So excited to be on the show and answer any questions you have or talk about what we want to talk about.
That is a great start. Starting at the bottom, the janitor or the mailroom, right? You hear?
Yes. I mean, whatever. I mean, I'm not afraid to get my hands dirty.
Yeah, excellent. So we'll talk a lot about businesses here to start. So what are some key ingredients that you believe separate a good business from a great one, especially with an eye towards an eventual sale?
I'm a big so I didn't share this, but I kind of really started leaning into the investment banking space when I had the opportunity to I ran an online fitness company as chief operating officer. And the one thing, so I learned about, from a credit perspective, being a banker, I learned about what financially was important for a really good business, right? The typical ratios that somebody would see, say, okay, this is a good thing or a bad business, right?
Right.
But what I really learned in running a business was how important operations are,
Right.
how important processes and procedures are. How important is it that anyone could essentially come in and start working on one of your processes there without you having to kind of create that process for them? So I think the one big separator that I see from I don't want to say a good business to a bad business, but from a good business to a great business would be good business being one that makes money and throws off a lot of cash flow, obviously, right? But what makes a
Right.
really great business is someone that's been able to really narrow down the processes and the procedures and built essentially a playbook for anybody else to come in and plug into to continue to grow that business.
Right. Right. That's excellent. So in the what early decisions would you advise entrepreneurs to adopt? So you sort of answered it already, but to make their growth strategy successful and to keep them ready from day one, where there may be a sale down the line. I mean, obviously processes are going to be in there.
Yeah, I mean, I think it really comes down to, and it may seem silly, but you need to be able to figure out what it is that you stand for. What is it that you represent? What is the battle cry going to be for the company itself? I think that can't be something that you're thinking about, 2 years in, 3 years in. You have to know who we are, what we stand for, who we serve, why we serve. And once you have all of that information there, then you can kind of build all of the process around the business. And what I would say is really take it from, okay, how do we get the message out there first? Okay, once we get the message out there, people are going to raise their hand and say, okay, we want to be able to work with you. Well, what does that process look like? What is the onboarding process for a client? What is the full customer journey going to look from taking somebody on as a client through keeping them on as a client? And that's a lot, like that's important to figure out right from the beginning, and it's something you should be revisiting on a regular basis. And that's where I say it's like every year it's say, okay, let's judge ourselves. How did Lisa do with onboarding new clients to her practice? Is there anything that she could have done better? Could she go back to some of those clients that are rabid fans and say, what about our process made this so amazing for you? And then double down on that.
Yeah. That's a big area in our business because there's a lot when we start working with a client financially to gather and collect and ask. And we're always questioning, should we do it this way? How can we do it better? And it's the first taste they have of working with you. So you really want it to be good.
And
Um,
I'm sorry, can I
yeah,
add? I
of
think
course.
another really good point is, you know, let's just talk about your business and my business.
Hmm.
Um, Financial services, advisory, planning, any of these type of businesses. I mean, listen, there's no shortage of people like you and I in this
Yes.
in New Jersey, in New York, in the tri-state, in the world, right?
Right.
And I think that's the one you really need to figure out what is your differentiator?
Yes.
What separates you from all of the noise? And what makes you different and what makes people want to work with you, right? You can't just say, well, we're just going to put out the same thing that anybody else does,
Right.
right? Because, when I worked for a commercial bank, you know, if someone was to charge 10% on a rate and somebody was to charge 5% on a rate, like that's just not the way it works. Everybody's right around the same rate.
Right.
Everybody offers right around the same products, but
Right.
it's like, who do you want to work with and why do you want to work with them?
Yeah.
That's what you really got to figure out in any business. So it's
Yeah.
a very elementary example that you and I can understand, but
Yes.
hopefully the listeners can do the same.
Well, I call myself a financial planner first and then a wealth manager or wealth advisor because that is really who I am first. And, but the amount of people out there saying we do holistic financial planning makes me chuckle. So I have to show how I really do that. And I don't use that term because I feel like too many other people do it. So it
Yeah.
is differentiating yourself is huge.
Yeah. But if somebody asks me right now, they're like, well, what do you do? What do you do, Michael? I, I work for a bespoke investment bank. 70% of our business, 80% of our business is sell side advisory. I sound literally like every other investment banker in the world.
Right.
But what makes Michael Fischer different? I always say, what's the name in the middle of the business card, not at the top?
Yeah.
Michael Fischer, my value proposition is I enable the fulfillment of destiny through nurturing leadership. That's what I do. And that's very broad and that sounds very woo woo. But think about it.
Mhm.
I take the good things in a business or a person and I help enable the fulfillment of that. That's
Right.
what I do, whether that be
Right.
a stronger exit, a stronger company, a stronger resilient mindset. That's what I do. And that's what separates me from every other investment banker or,
Right.
financial advisor, that's out there in the world.
Right. We kind of touched on it, but I'll ask you if there's anything else. I was going to ask you if there's one or two actionable tips, so really specific tips for a business owner as they're looking towards a sale to either increase their value or increase their personal fulfillment.
I would say, for me, what I always like to know is get really clear on what you want to have happen in this. You know, what would you really like to see in a sale? I mean, it's a much different process for somebody that's 70 years old that says, "Hey, my wife has been bothering me for years. Or husband's been bothering me for years. We have the place in Florida. We want to get down there and we want to spend time being grandparents." That's a much different sale than somebody who might be in their mid 40s that has built a really great company and said, "Hey, I've taken this about as far as I can take it on my own. I need
Hmm.
more capital. I need more. I need more strength. Need more of a bigger team behind me." But I'm willing to stay on board for the next 5 to 10 years to really keep this, make this, keep going. I think
Right.
you really need to figure out what do you want in a sale and what is important to you. I talk to business owners all the time. Some people are like, it's all about the money. It's
Yeah.
literally all about the money. Whatever the best offer is, I don't care what it is, I will take the biggest offer. Then there's other people that said, hey, I have made so much money over the years. My family's good, my kids are good, everything is good, but I love my people. I love my legacy that I've created. Like, this is a home to so many different people. I care about my customers. It's not so much about the money, it's how do we transition the legacy. So I think as a business owner, you really need to start thinking about, what this is ultimately going to look like for you, and make sure you do it, 3 to 5 years before you actually want to press the button to do this,
Yeah,
right?
yeah, so much so. I mean,
Yeah.
I keep gonna keep giving parallels to my business, but it's hard to know, and I heard this analogy once, like it's hard to know where to go if you don't know where you're trying to achieve. It's like getting in your car, the GPS asks you the destination, you say, I don't know. It's not gonna
Yeah,
get you
and
there.
it's hard, and you can't compare yourself to anybody else. I mean, there's
No.
so many of these business owners that you meet. I mean, we have all these beautiful golf courses down here in Monmouth County, all these clubs, and it's like, okay, well, my buddy just sold his
Oh,
business, and this is what it's like. My expectation of what's gonna happen to me is based on what my buddy did.
yeah,
Even if it's not even directly like a related business.
yeah.
Like, you don't know, like, everything is very, very individualized thing, right? So you can't
Of
make all
course.
your plans, and you can't certainly say, okay, I just played 18 holes with my buddy who sold his company for $100 million. And then you're like, okay, well, Monday we're putting the company on the market. Like,
And I
it,
want $100 million.
and I want $100 million. It's like, that's not the way it's really gonna work. So,
Right.
another thing that I would say to people, that's I like getting really early in the process for people. And
Hmm.
for me, listen, this is the way I say things, and I'll say this to the listeners. I just want to be a helpful resource to the world, and I want business owners to be able to protect themselves when they go out and do this, because what ends up happening is, if you have a good business, you're going to get a lot of knocks on the door, you're going to get a lot of phone calls from private equity, all these different people that are out there.
Hmm.
What I say all the time is, find out, talk to somebody like me who's not going to hard pressure sell you or anything. Find out what's a similar business selling for. What are the value drivers that made that sale so powerful? It could be many different things, right? And then if you have 3 to 5 years ahead of that, then you know what levers you can pull
Right.
to maybe get you to that $100 million sale. But because you could be totally blind to the whole thing, as to what it might be actually detrimental to you. You're like, oh, I have the best customer in the world. They pay their bills all the time, and it's 90% of your business. And it's
Yeah.
like, that's not a good
No.
thing necessarily,
Right.
right? You
Right.
might want to diversify a little bit, but it's all stuff that you can do if you take the time to plan it out.
Right. And I meet a lot of, it seems like a lot more fractional CFOs these days that do a lot of work where they come in and they help clean up the books, and preferably 2 to 3 years beforehand, not 6 months before.
Yeah.
And how to, yeah, just basically how to clean up the books. I assume you work with these people, or do you do that type of work too?
We have an internal team. We have a CPA and staff that can help with that. But I would say, kind of going back to my first point, I think cleaning up the books is one part of it, but also cleaning up the operations, the
Yeah.
processes and procedures, the contracts you have in place, the employees that you have in place. I mean, like, do you have one person that drives all of the business that's coming in, right? Even though it's diversified, coming from many different angles, you have one person on your sales team that's driving a lot of this business. Well, you want to make sure that contract is buttoned up. they're bought
Right.
in for whoever the next buyer is, right? Because that's what's going to be important to the next
Right.
buyer. So I would say that interim CFO work can be helpful if you don't have a strong CFO in place.
Right.
Um, but then I would also say, having someone that can really look at the operations of the company. Do you have the processes and procedures? Do you have the
Yeah.
contracts in place? Is there anything that's leaking right now? And when I say leaking, like, are you paying too much somebody manage your 401k? Have you had somebody even look at
Right.
that? Is that,
Right.
are there other expenses that are there? Are you paying way too much for your merchant processing? Is there anything else in there that you could maybe change around? Or maybe there's employees that you don't really need as much anymore, right? How
Right.
do you get the business running operationally very well, you know, in preparation for that sale?
Right. And we kind of answered this too, but I was going to ask you some red flags that maybe you see. I mean, definitely, most of your business, one customer, most of your business, one employee generating it, especially if they're in their, 60s and thinking of retiring.
Yeah.
I guess anything else that you've seen that's derailed something sort of along the way that was maybe surprising?
I think the best approach is I heard somebody say this, I never understood what it meant, but I finally had to look it up, but it's like you have to be very open kimono with everything. I would be very I would recommend strongly that if you're going to go about this process, you have someone represent you in the
Yeah.
process. Because, as a quick example, you could have a business that's very successful. Someone could come knock on the door and say, "Hey," and throw a number at you that is beyond your wildest
Right.
expectations. And you're just like, "Oh, this is great. I'm gonna take it." But you don't really know, is it a good offer? Is it a bad offer? If I showed it to 3 other people, would somebody give me a stronger offer? Is
Hmm.
someone gonna be able to help me kinda get through the process of diligence, right? That's like a, pardon me, but a proctology exam, right? When
Yeah.
it comes to, getting into the business. And that big offer that you might have gotten in the beginning will start to get whittled down if you don't have somebody to defend you. So what I would
Yeah.
say is if higher representation
Right.
and be very open with them. If there's something that happened in the past that you're not sure about, maybe something from like a lawsuit perspective, just any kind of weird skeleton in the
Hmm.
closet, it's better to address it up front. I
Right.
learned this when I was a commercial, banker, a middle market banker. The best thing that I could do was if there's any flaws on a business, my the best approach would be don't let somebody find out what that
Yeah.
flaw is by accident. It's,
Hmm.
"Hey, let's put a spotlight on it. Okay, years ago, this such and such happened. It was a mistake, but this is the reason why we changed it and how we do it moving forward." I
Right.
mean, anytime you can just lead with that and then give a mitigant around it, it's much better than someone starting to dig in and be like, "Oh, well, Lisa,
We're trying to
say
hide
you
that.
personally filed for bankruptcy back in 2002. Can you share about like that?" Then it's a character thing, right? If
Right.
you would have said, "Hey, look, I started my first business. I was inexperienced. I had to file bankruptcy, but I learned my lessons from it. Here's what I learned, and here's what I did
Right.
differently." Then people are like, "Okay, cool." Like at least they're being open and honest.
Right. Goes back to honesty is the best policy.
Absolutely,
Been said
absolutely. And I
forever,
think
but it still holds true.
And I think it's any relationship that you have with a professional, right? Anybody that works with you, Lisa, anybody that works with me, just be open kimono, open and honest as to here's where everything is, here's how I'm thinking about it, because how are you going to be able to make, good recommendations without knowing all of the different things that are going on with
Right.
it?
Right. So do you see any trends in investment banking? I mean, I think we all see the PE trend. I have had clients get purchased by PE. Um, and it's interesting the way different people respond. Like some people, I had one client way back that was like, I'm worth 5 times more than that. I'm exaggerating. And the other one like couldn't take the money fast enough. So it does go back to what they wanted. Like one client just had a number in their head that was, whatever. And the other one was just so happy to partner with somebody and then eventually get out. But any trends that you see when it comes to people selling the businesses that are interesting or different?
I would say the trends that I see that are very interesting is, any of these old economy businesses, Main Street businesses are the ones that are just very, anything that can't be really replaced by AI, robotics, things like that. Those businesses are still, very, very successful, and they get paid. People get very paid very well on these different things.
Mhm.
I would say the biggest thing that people need to think about as far as trends are concerned is you can't say, okay, well, a business like this trades at X. You could say maybe, the way we do it in our practice is, if somebody comes to us, we could say, look, the what we can see based on prior experience, this is what we would see on the worst case scenario. If we had a really bad day, here's what the floor of the value of the company from a floor perspective would be.
Right.
The market determines what a company's worth.
Yeah.
That's really what it is. Like, you can't say why, because somebody might pay more for that
Right.
ancillary business that they want to bring on,
Yeah.
because it's important to the larger business that's
Right.
at scale. So it really is the market that determines what your business is worth. And from a trend perspective, I could say old economy businesses are doing very, very well right now. Um, yeah, I mean, I would say that was probably
Yeah. Yeah.
the biggest trend that I could say. But again, with a lot of these old economy businesses, plumbers, electricians, roofers, a lot of different businesses like this, even from a manufacturing standpoint, people still aren't paying attention to all of the big things, right? I remember I was a plumber's helper. The whole company was based on one guy and the relationships that one guy had.
Yeah.
How is that a sellable company? When you
Right.
could say, well, my company makes all this money every year, and they say that this is a 4 times multiple. I make $1 million a year. My business is worth $4 million. Well, it's not worth
Right.
$4 million if you're not involved in it. I mean, if
Exactly.
you're so heavily involved in it,
Exactly.
how can we ever change that?
Right. I know it's tough when you start a small business, is you got to duplicate yourself somehow.
That's it. That's it.
Um, so I usually like to keep it around a half an hour, but I do want to finish up with some upcoming projects of yours that you might be excited about that maybe you want to share.
Yeah, very, very exciting. So I've come to realize kind of what I do and what I enjoy. It's kind of three different buckets. I like to wear way too many different hats. When anybody ever says, you sound busy, I'm probably the busiest person in the world. I'm What I've come to realize is the more that I put myself out there, and the more that I try to be a helpful resource to the world, and I give as much as possible, then so many good things come back to me. So I
Mhm.
always look for opportunities to give first. Coming from a person that has kind of started at the bottom and has now made his way up to a pretty senior level position at an investment bank, what I'm really excited about is I'm releasing my first book. It's called The 5 Dimensions of Vitality. It's literally a 90-minute read.
Okay.
It's the basic framework around what I started focusing on in my life to get that kind of hockey stick growth for myself personally. So I'm very excited about that. I'm building
Congratulations.
a community around the book called Assemble Your Allies. It's a community of people that want to see each other win just as badly as they want to win themselves. We're
Hmm.
tying this to charity, different events that we do. I'm tying in the different things that I focus on. I'm the vice president of the Association for Corporate Growth, ACG, New Jersey. I'm involved globally with the organization. So, yeah, my book, my marketing, I put out an article every week on LinkedIn. I have this whole Assemble Your Allies community getting built here. So, my big focus in 2026 is going to be the marketing side and everything that I do there with the book and speaking,
Right.
et cetera. And then the other big part of it is going to be, my M&A business and my practice of just trying to be a helpful resource to people. I would say, like, the asshole investment and banker. Pardon my language. I don't know if but
We're
there's a
okay.
reputation for people in my field, and I'm trying to kind of change that by
Yeah,
just being a real helpful resource to people. So
right.
yeah, that's the stuff I'm most excited about, but
Excellent.
really appreciate everybody, supporting the book. It's going to be on Amazon. You can, buy it everywhere. I have my own podcast called Going Beyond the Deal. I record a episode every week with,
Mhm.
founders and executives of companies, where we talk about more than just their company, but what it took to build that company, which I think
Right.
is a really important part of the company.
Excellent. That's great. Well, congratulations. You got a big year ahead. Again,
Thank
we
you so
thank
much.
J. Michael Fisher Jr. This is Lisa Crosta from Crescent Harbor Private Wealth with Crescent Connections. Everyone have a great day.